Assalamualaikum, my name is Nur Amira binti Mandu, matrix number 82483451. Seng Company has been a leading Malaysian biscuit manufacturer since 1958, famous for its Ping Pong cream cracker, and the company was listed on Bursa Malaysia in 2000. Seng insisted that all its products are safe to eat and comply with local food safety standards and have certifications such as ISO 9001, HACCP and Halal. Seng's objective is to become a multinational organization in the food industry, while its mission is to offer quality product to consume while protecting the interests of shareholders and the welfare of employees. Seng operates in both the local and international market, with the majority of sales from the domestic market and the remainder from the export market, and has recorded steady growth over the past 10 years.
My name is Nur Amira binti Muhammad Azhar. My meeting number is 82483066. My part is about background Watai. Watai Industry Berhad is a major nation's biscuit and confectionery industry, and it established in 1962 and headquartered in Seri Kembangan, Selangor. For business segment, the first one is manufacturing segment. Watai produce biscuits, cakes, and snack products. It also have a well-known brands like Luxury, Pesta, Melaki, Delay, and Watai. For the trading and distribution segment, Watai handles access and distribution. Watai also trades local and international markets. For the OEM, Watai also one of the members to produce biscuit for third-party brands. For market and export, Watai export about 40% to the other country. For the strategy and strengths, Watai focus on product innovation, product technology, and quality control.
Current ratio increased from 1.95 times 2022 to 2.1 times 2024. Asset test ratio increased from 1.51 times 2022 to 1.60 times 2024. Account receivable turnover increased from 7.92 times 2022 to 9 times 2024. Inventory turnover increased slightly from 8.1 times 2022 to 8.60 times 2024.
For the capital such ratios, for the debt ratios, it decreased from 33.70% to the 32.03%, and then increased to the 34.75%. And then for the time interest earned, it increased from 1375.65 times to the 32960 times, and then decreased to the 2591.91 times. For the asset management efficiency ratio, which total asset turnover, it shows that the first 2 years is maintained about 1.50 times, and then decreased to the 1.08 times in 2024. For the profitability ratio, gross profit margin shows that increase for these 3 years. It increased from 24.60% to the 30.36% to the, and then increased to the 31.5%. For the net profit margin also the same, which is increased from 8.20% to the 12.62%, and then increased to the 14.57%.
For operating return on asset increased from 16.60% at 2022 to 29.39% at 2024. For return on equity increased from 18.48% at 2022 to 35.17% at 2024. For market to book ratio increased from 8.61 times at 2022 to 10.30 times at 2024. For earning per share increased from RM 3.26 at 2022 to RM 7.20 at 2024. For price earning ratio decreased from RM 0.48 at 2022 to RM 0.30 at 2024.
The current ratio increased from 2022 to 2023, as did the asset tax ratio, which show a significant increase from 2022 to 2024. For account receivable turnover, this decreased from 2024 by 2.66 times to 2.39 times in 2024. After that, inventory turnover showed an increase from 2022 by 4.67 times to 5.58 times in 2024 due to efficiency in management. Debt ratio in 2024 decreased from 78.06% to 72.45% in 2023, but in 2024 it increased to 73.33%.
Assalamualaikum, my name is Nur Amira binti Ismail and my metric number is A24833099. First, we start with the capital structure ratio, which is measured using the times interest earned ratio. In 2022 and 2023, the ratio was negative, indicating that the company was unable to cover interest expenses due to operating losses. However, in 2024, the ratio improved to 1.53 times, showing that the company has started to generate sufficient operating income to meet its interest obligation. Next, we look at the asset management efficiency ratio, specifically the total assets turnover. The ratio decreased from 1.06 times in 2022 to 0.83 times in 2023, indicating lower efficiency. However, it improved to 0.95 times in 2024, suggesting better utilization of assets to generate sales. Moving on to the profitability ratios, the gross profit margin increased steadily from 21.85% in 2022 to 29.57 times in 2024, showing improved cost efficiency. The net profit margin was negative in 2022 and 2023, but turned positive at 1.30% in 2024, indicating a return to profitability. In addition, operating return on asset also improved to 2.72% in 2024, reflecting better operational performance. Finally, under the market value ratio, the market to book ratio remained below 1, indicating cautious investor perception. Earnings per share were negative in earlier years but improved in 2024, while the price earning ratio also showed improvement. Furthermore, return on equity increased to 4.63% in 2024, showing that shareholders begin to receive positive returns. Overall, the ratios indicate that the company faced challenges in earlier years but showed significant financial improvement in 2024.
Assalamualaikum, my name is Nur Sanatuli Udina binti Muhammad Samri. My matric number A2483206. I will present about recommendation, which is Seng. Based on our analysis, although Seng Industry Berhad is a well-established and trusted snack manufacturer, recent financial ratio trends suggest that the company needs to improve its efficiency and competitiveness. Firstly, Seng Industry Berhad should improve operational efficiency by increasing the use of automation in the production process. For example, real-time machine monitoring system can help reduce labor costs, minimize errors, and reduce production downtime. In addition, implementing lean production practice can reduce waste and improve overall productivity. Secondly, the company should expand its market and sales channel, strengthening its presence on e-commerce platforms such as Shopee, Lazada, and TikTok Shop can help reach more customers. At the same time, expanding into Asian market can diversify income sources without significantly increasing costs. Lastly, the company should focus on maximizing asset utilization and strengthening cost management by optimizing factory capacity and reviewing supplier contracts. Seng Industry Berhad can control costs, improve profit margins, and ensure long-term sustainability.
Assalamualaikum, my name is Rido Fitri Roslan. I will talk about recommendation Kuatai. Okay, based on our analysis, Kuatai still have several areas that can be further improved. Okay, firstly, Kuatai should focus on product innovation by introducing new biscuit variant by offering healthier options such as high fiber or protein-based biscuit. Company can attract customers from different age group and increase overall product demand. Okay, second is Kuatai need to move toward eco-friendly and sustainable packaging. Using environmentally friendly material and safe printing method will not only reduce environmental impact but also improve the company image as a responsible and sustainable brand. Third, the company should strengthen the distribution network and marketing coverage. Expanding access through retail outlet, e-commerce platform, and international market will ensure the Kuatai products are easily available and competitive both local and globally. Lastly, Kuatai must enhance digital marketing and brand strength by actively using social media platform and creative online campaign. The company can stay relevant, engage younger consumer, and increase brand awareness, which will contribute to long-term sales.
My name is Nur Aminus Binti Roslan. My matric number A24B2920. I will present about advice on the most suitable sources of fund for the company business, expansion and conclusion. First, I will present about advice for Seng Industry Berhad. The main source of funding is retained earning, which can finance automation, marketing and domestic expansion without adding financial risk. Control tab and government grants are suitable for large projects like automation and export growth, as the company can comfortably cover interest. Equity financing is used only for large-scale expansion due to the risk of ownership dilution. For Kuatai Industry Berhad, a similar funding strategy applied. Retained earnings support factory upgrades, operation and product innovation while maintaining a strong equity base. Control debt and government support, MIDA and MITI, enable major investment at lower capital costs, boosting competitive without high financial risk. Equity financing is reserved for large-scale expansion to avoid diluting ownership. Now, I will present about conclusion. Both companies show potential for sustainable growth despite different financial position. Seng performed solely from 2020 to 2024 with high ROE, efficient asset use, and healthy liquidity. Expansion can be funded through retained earnings, supported by long-term debt and government grants. Kuatai is in a financial recovery phase with positive ROE and improved interest coverage. A balanced financing approach uses retained earnings, control debt, government grants, and prudent equity financing. Key focus area for both are product innovation, digital marketing, expand distribution, and sustainable practice, supporting long-term sustainable growth.
That's all from us. Thank you.